The market's not going to crash. It's going to be a recession, soft landing. Whenever anybody says that, including myself, just kind of say, I don't think anybody knows what they're talking about. I'm just willing to listen to everybody. All I know is only the paranoid survive.
All right, so PBD just made a video this morning about the market, why it hasn't crashed. Remember, he said earlier in the year that the market would crash, okay, that we would see something, you know, terrible, worse than '08, whatever it was. And I'm a fan of PBD, but I think he's wrong here. I like his analysis. And by the way, on Wednesday, I'm going to actually go through his whole video and show you guys where he's, you know, where he's wrong about the data. And first, we're going to take a look at the technicals there. So that's Patrick David. And he's, you know, I like the guy, respect the dude, definitely. But when it comes to the market, I think he's missing a couple aspects to the market, right? We are going to actually first start, because I think we're looking at a bull trap here, right? I'm just kidding. It's a bear trap. We're looking at a bear trap. All right. So what is a bear trap? The bears are trying to stack in here, right? And I'm going to give this about a 70% chance that following earnings season, that the S&P goes higher to a year-end rally. That's been my prediction going forward. I have a lot of evidence to back that up. And a lot of it is positioning and negativity. I know people are saying, oh my God, they're so bullish. A lot of people are negative here. So Wednesday will be the full report, but today we're looking at these technicals on the S&P 500. So you have a lot of resistance, okay? We have the 50-day moving average first off as resistance. You have the 100 daily moving average as resistance. You have the gap fill as resistance. This is where the S&P actually gapped down, right? It gapped down September 20th, big gap down. That's when we had, you know, a lot of negativity back down to the trend. And once you fill the gap, you either fill the gap and you reverse. Now, I've been saying here for a while, if you're going to get bearish at the gap. Get bearish at resistance, which is 438.50. That's where you want to get bearish, right? It pulls into that level, rejects it. You got the 50, the 100 above that level also as a resistance level, and then you get short, and you know, you return right back down. You could take that that trade. Now, where's your support at? Well, support is we're looking at this. We're looking at this cup and handle. Okay, this was the breakout that we had the last couple days. We came back and pulled. So here's your cup. Here's your cup. Here's your handle right off the 200, right? The 200 daily moving average, where we said, hey, there's going to be a lot of buyers coming in here at the 200, because that's a institutional level, right? That's where people want to get long. And trust me when I tell you, a lot of fund managers are at risk because they are going to need to get a lot of the S&P, maybe it's the Magnificent Seven. They're going to need to get a lot of these companies inside of their portfolio by the end of the year. So that's, you know, there's a lot of pressures to the upside. We broke out of the cup and handle, okay, when we pulled back, supported it, right? So we got a pullback support. So this zone is really tight here, 438.50 and 432. That's a really tight zone. Those are the technicals I am looking at. If we do come back down, I bet we test the 200 again. All right. If we break out, we go to the top of the range, but it is earnings season. It is earnings season. And, you know, stocks are already, earnings growth is already set to be higher. Okay. Earnings growth is set to be higher. And that's why I'm bullish. Now, moving over to the macro, right? The macro forces. Let's take a look at yields. Yields have been the story. I think it continues to be the story now outside of the war, right? Outside of the Middle Eastern conflict. If it does expand, that is an issue. We talked about this. If the Middle Eastern conflict expands, well, we're going to be in trouble, right? Because there's a lot of uncertainty. I don't think that takes us to all-time lows, maybe to 4,000. Who knows if it, you know, if it really starts to escalate, because it's unpredictable. But it's not a big, you know, it's not there yet. It's not there yet. And typically on average, the market goes higher after these type of invasions. It's not, you know, once you get Iran involved, if Russia flips, if China flips, we might be in trouble. And you want to keep track of the Fed speakers, right? So how are yields responding? Right now, yields are responding a little higher. I don't want to see this, but I think the local top is in. I think the top is in for now. We're going to see through earnings season if that top holds for yields. Why? Because I mean, yields are the cost of capital. If the cost of capital of debt remains stagnant sideways, the market while the market earnings start to pick up, right? S&P 500 companies earnings pick up, rolling expansion, recession, stocks can go higher. And the key to this is really getting the bond market up again, right? You want to see bonds start to pull in. You want to see a bid in bonds somewhere going into the fourth quarter, going into recession. And if a lot of people do believe we're heading to recession, you should see bond flow start to pick up. Yeah, I know China's selling. I know the Fed is selling, but If bonds stabilize here, rates will stabilize at least on the long end. Okay, now the dollar, we got some good news today. If you're bullish, the dollar stopped going up. Okay, and we were looking for this. Now it is still supporting the 105.50 level. This is a macro force. This is a very critical macro force. If you're not used to it, the US dollar is it is the cost of trade. It's just like when you go to the store, if you have to pay a tax, right? If you have to pay a tax, you're paying more. If you pay no tax, you're paying less. The dollar is a tax on transactions, on global trade. It's a tax on any type of financial transaction, right? So the higher the dollar, the higher the tax. The lower the dollar, and it depends if you're an exporter or importer, but the lower the dollar, the more risk assets will move higher. They're priced in dollars, okay? Now that's a simple way of looking at it. Well, it's kind of a complex way of looking at it, but the simple way of looking at it is here. If the dollar goes up, it's a headwind to stocks. If the dollar comes down, it becomes a tailwind for stocks, for crypto in general. And yes, we had a false breakout earlier. I know we saw that. If you have your comments, go ahead and throw them on there. Yeah, let's get through the macro forces to see what you guys got coming in. What up, Slime Z? We're squeezing if it fills this gap. Yeah, if we fill that gap, let's see if we gap and go there. It's tricky. I think the war is going to resolve if the market sees the war as resolving itself out right now. And we're going to look at some of these headlines where things, Iran came out, and who knows, you can't believe everything, but Iran came out and basically said, we do not support Hamas, right? Russia is already talking about, keeping the war, not escalating anything. Who knows if you can trust them? Either way, if that does fall through, things should settle. The VIX should come back down. Market risk will come down. Oil prices are already falling because the U.S. is easing sanctions for Venezuela, right? And they're a big oil producer. And if you ease those sanctions, then oil comes down now, and we saw oil come down. But anyways, yeah, the dollar's coming down. Look, it broke the trend, right? It broke the trend to the downside. It supported 105.50. We're at a critical zone here. It did come back up, and it got rejected at the trend. So on a technical basis, we're still in a bull. We're still transitioning to the peak in the macro forces, the peak in rates, the peak in the dollar, and the peak in oil, right? Now the rates might be more bullish than the dollar. And then oil, right now, oil's, sort of peaking here. So basically you have Venezuela, right, coming in. And I think there's going to be more supply. Nobody wants to see oil spike here, right? Gold, I have a big issue with gold. People are, oh my, buy gold. Nobody's buying gold except for the baby boomers. Okay, nat gas fell considerably. It did get a bid, but it did fall back down within that zone. Okay, the VIX came back down. Again, not getting above 20. It's not holding above 20. That's very bullish, right? Now, looking at let's see, at NASDAQ move index. Okay, bond volatility, that's a negative, right? But anyways, the S&P 500 in general is still in a bull trend. We're still moving higher. We actually got right back above that trend. We do need to support 432. We need to get above 435. We need to hold 438 to really launch off. And this is going to come down to earnings. We have Tesla and Netflix on Wednesday. I will be streaming the Tesla earnings on Wednesday and going through that. There's a lot of negativity in Tesla right now also, right? A lot of sentiment. Morgan Stanley came out with a report showing that their investors for Tesla are very negative. Their sentiment is very negative. Their expectations are very low. That always sets you up, and a lot of people don't understand this. That sets you up for an upside surprise. That typically sets you up for an upside surprise. Plus, the overall market starting to move back up, being more constructive because we're oversold, because earnings season is set to be higher. Earnings growth is set to go higher. If the overall index rises, stocks rise, right? In general, not all of them, but the premium stocks do rise on that, right? And people are probably going to start leveraging in. Look, inflation is tame. We got the inflation numbers, and right, headline inflation is moving sideways. It's not moving higher. It is pretty tame. I wanted to look at what the sort of what the Fed is saying here. They're signaling, let's throw this on the screen. The Fed is actually signaling, some of the Fed members, and I know they go back and forth, but we're just tracking the language. We're taking a guess here. Nobody knows exactly how it's going to play out. Fed Harker, the Fed should hold rates steady absent of a turn in data. Actually, I have this on my profile. Let's take a look here. All right, so Fed Harker says that they should hold rates steady unless the data changes. Where's the data going to change at? We have economic activity. We have housing. Housing is in recession. Housing's in recession. It's not going anywhere, right? Housing prices might be kind of sticky. They're falling, but they're kind of sticky. Shelter's falling. The only reason shelter didn't fall faster was lodging away from home. That exploded month over month, and that kept the shelter CPI up. That's going to fall. That's going to resolve itself, right? So so that's Fed Harker, right? The other Fed, let me see, where's the other Fed? Who was it? He was very dovish this morning. Where's the other Fed speaker? He was, I think I retweeted it. It was Goolsby. Either way, Goolsby said this is the last hike. Fed Goolsby said this is the last hike. And of course, they can't say that for sure, but I think they're signaling to us the Fed's going to pause here. Maybe they hike again in December. I'm not taking that out of the picture. Maybe they do hike in December. But for now, I think they do pause, heading into an upside surprise earnings season, heading into a seasonal spend for the consumer, seasonal jobs. And so I think we go to all-time highs this year. Maybe there's a, in election year, in pre-election years, the S&P is the strongest in December. The last quarter is always the strongest, but December's, and then maybe we hit all-time highs and then we come back down. We'll see when it actually comes into play. So also we have the U.S. has reached an understanding with Venezuela. We talked about this, easing sanctions dependent on Maduro following through, blah, blah, blah. Easing sanctions to pump more oil, right? To get the supply up, to get the price of oil down. And that's the real geopolitical risk. It's not so much that the war expands. It's so much that oil prices start to spike again, right? That's the real issue here. So if we get that under control, right? If they figure that out, then the path to go higher, the economic path, the economic cycle is going to launch stocks higher. There's a lot of, downside. A lot of people have very negative sentiment. And I know you point out, oh my God, a lot of people will point out, oh, people are bullish now. A couple of people are bullish, but most people are still bearish. They're still afraid of the risks in the market. And that sets you up for a big upside surprise, just like it was in March of 2023, right? In March, April, the market broke out of the 4,200 level. And I think we're setting up for that again. Also, Putin tells Netanyahu that Russia is prepared to help end confrontation in the region and resolve it peacefully. Hey, believe it or not, maybe he's lying. Maybe he's making it. Either way, that sentiment lends to the easing of the geopolitical risks. If that continues to ease, along with Iran actually saying that they do not support Hamas, well, now you get this transition, right? You get this transition of sentiment where the big movers are not actually, there is no, it's not going to expand. If the war doesn't expand, we're setting up for a good. Now, the biggest catalysts here are two things: geopolitical risks and earnings season. So if the geopolitics ease, if the escalations ease, and earnings come in stronger than expected, and it's not even so much stronger than expected as much as it is guidance. How is the guidance going to look? That's where you win or lose, right? That's where you win or lose is how the guidance actually comes out. Okay, so we're looking for better or worse guidance overall for the S&P. You see any comments here? Yeah, let me know your comments, questions, whatever. But we are looking at the technicals. So back to the technicals. Yeah, let's go back to the technicals here. And I think we are staring at, like I said, an upside surprise. And here's one of the reasons why I think earnings go well. Oh, wrong one. Everybody thinks that the lag effects of the lag effects are going to come in to play. They're going to crush the market at some point. Maybe they do in 2024, but watch this. This is from the Fed also. Fed funds rate impact. This is the Fed funds rate impact on corporations, right? You have the Fed funds in red. It's climbing higher. Typically, what does that do? It creates higher interest payments for the debt that corporations are borrowing, that S&P 500 companies are borrowing. In this case, you see the interest payments for corporations, right? Net interest paid as a percentage of profits is lower. It is lower. So, and it's still falling. What happens when the Fed actually cuts rates? Well, profit margins are rising in general. You can go find an exception here. We don't run the world off exceptions, but in general, profit margins are falling. Oh my God, consumer debt is at all-time highs. It sure is, but mortgage debt is not. The housing market is not collapsing. That's a bigger percentage of income, of disposable income, or a bigger percentage of collateral for people is their actual mortgages, not their credit card debt. So I think they still keep spending, and maybe you do have a collapse in Q1, Q2 of 2024, maybe even not till summertime. We might not get that till summertime. Even if so, that's the case, what do you get? You get a setup for the White House to come in and say, okay, credit card forgiveness. We had a war in Israel. We have a war in Ukraine. They want votes. They want votes. So you're out of your mind. Okay, that's a little exaggerative, but I think you have to consider the fact that this is the perfect setup for the White House to come in and forgive debt, right? The debt jubilee. Oh my God, that's terrible. Well, they might do it. So that's far into the future. This is a Santa Claus rally setup, in my view, oversold Santa Claus rally carbides. If you do post something on the Discord, I'll go ahead and pull up that chart so we can see your technicals. Let me see if you have anything on there now. But yeah, these are net interest payment percentage of profits. So people argue, oh, the Magnificent Seven are the only stocks that can go higher. They're leading the market. Who cares? They led the market to the downside, right? Meta sold off 80%, Tesla sold off 80%, 75%, actually about 75. And they led to the downside. Why wouldn't they lead to the upside when the narratives, AI, efficiencies, more revenue growth, earnings per share up, buybacks, right? There's a lot of catalysts for the Mag 7. And a couple, companies that are lower tier, maybe not, tier one companies, but they can grow in this environment. You have other narratives. You have not just AI, you have the blockchain narrative that is not here yet. We got the fake Bitcoin ETF that came in this morning, right? Well, that's hilarious. Fake news on the Bitcoin ETF. You saw Bitcoin jump to 20K. Let's take a look at that really quick before I get to that comment. Bitcoin jumped to 30K. My bad, not 20K. Bitcoin jumps to 30K. Like I'm telling you, when this gets passed, it's going to explode, right? And that was a big short squeeze there. And when it does it's going to get passed at some point. Kathy Wood was talking about it also. And the narrative for tokenization is also running that. So you do have that Bitcoin upside move, and now it's holding higher. It's actually holding a little bit higher here. Still optimistic year-end rally. Typically, Bitcoin does do pretty good into October is the bear market killer. Remember that October is the bear market killer. Let's see, what do we have? It looks like MM took out the top stops on SPY today. Money markets took. Oh, I see what you're saying. Not money markets. You're saying not money market. What is the name you're saying? Market makers took out the stops on SPY today. Are you talking about for the upside? SPY on the upside. And then we have carbides here. For the past 2 weeks, let me see. Can I move this over? Here we go. For the past 2 weeks, the S&P volumes fall off considerably after the first 20 to 30 minutes of the market open. There's a lot of indecision right now. Yes, there is. And I think this indecision is coming from two things. Where's the war going to lean? So if you get more constructive on the market's going to get more constructive if the war starts to calm down. And I know it might be ramping up, but as long as it calms down, as in it doesn't expand, right? It doesn't expand into the Iran. And that could be a black swan event if something crazy happens. But again, you want to bet on the generalities. You don't want to take a bet on a low probability bet. There's dudes who are still, I've seen people in the comments on that PBD, who is it, Patrick Big David. I saw some dudes in the comments, because I'm going to go over his video on Wednesday and debunk probably 70% of what he's saying here. I like the dude. I agree with him, but he's not a market expert, right? He's definitely not a market expert, and I'm going to change your mind on that. Number two, or the other part to that is there's a lot of people who are still out of the market, right? They got out in 2019 and they're like, I'm still waiting for stocks to crash to get back in. That's hilarious. That is hilarious. They're still waiting 4 years later to get in while Bitcoin's up 10x, right? Or from 4K from the lows up 4, right now it's up what, 5, 6x. So it's a stock picker's market for sure, but people are still waiting. That there's no selling pressure. There's not a lot of selling pressure here unless something really bad happens. So good luck. You're going to be in 2040 waiting for that bid, and then by the time you actually get it, well, your legs aren't going to work because you didn't work out enough. So you're going to have that atrophy on your atrophy in the body unless you're working out. Anyways, so what else do you have? Will Bitcoin go back to 15 to 20K before the halving? I don't think so, bro. This setup does not point to Bitcoin falling that far. I just don't think that's the case. Maybe 22K, but there's a lot of pressure to the upside. If we get the Santa Claus rally, if rates stabilize, if the dollar stabilizes and doesn't make new highs, Bitcoin is not going to go back down. It's not going to fall that far. If rates keep surging, make new highs, Bitcoin could go back to 22K. If the dollar breaks out, yes. If oil breaks out, yes, Bitcoin goes back down, possibly 20K, 22K, possibly. There's not a whole lot of sellers there, right? More people are accumulating. BlackRock, come on, you think BlackRock is selling Bitcoin? They're buying Bitcoin under the hood. They're buying crypto, the actual projects that are working under the hood. So I wouldn't bet on that, especially when Bitcoin's down this much. I don't think that's going to be the case here. Carbides, I'm going to check out and then let's take a look here at the QQQ, right? Qs are a lot stronger. This is the path for the Qs. that I've had marked on here since last week. This would be the more constructive path, but if earnings season is better than expected, well, actually, if earnings season just is the catalyst to go higher, well, this might not happen. You might just rip higher, but I'm going to keep this in mind, right? This is your next pivot right here, which is about 360. 360 is a pivot. That's where this consolidation is. So we have an area of consolidation around 360 to 363, right? If we get down here, this is also the uptrend, the local uptrend. Boom, you bounce, you move higher, and we'll see if the war escalates. Maybe we come down pretty quickly, but I still think that's going to be an opportunity for some of these fund managers who are underweight Nvidia, Amazon, Apple, Microsoft, Meta, whoever it is. They're going to start buying into the Qs. So I think the Qs still lead the rally. It is taking a while, but they are leading the rally. You got the Dow also breaking out of this consolidation earlier this day. I know they say there's no market breadth, but we're in a rolling recession, right? Who's at risk here? Commercial real estate, regional banks, they're going to fall apart here. Retailers, who was it? Rite Aids filed for bankruptcy, I think last night. So there is some weakness in the market. Commercial real estate's at risk here. When consumers switch their spending habits, whoever they switch out of, they're at risk here. They're paying high. They have to refi on their commercial, their real estate, their properties. They have to refi quicker than, Apple, and they're refining at high rates. So some of these regionals, but that's not the whole market. That doesn't carry the whole market. Definitely lower. Let's see what else you have. Journey, are crypto stocks good like Mara? Riot Strategy. I don't like none of those. I don't like none of those stocks, in my opinion. I think they're trash. I would rather you either own Bitcoin, you either own Ethereum, or you own something that's backed by fundamentals, which would be Chainlink. Okay. Or MicroStrategy. I like MicroStrategy. I don't like those miners. I don't trust them. MicroStrategy has been buying a lot of Bitcoin. AMD still has a nice setup. AMD has a nice setup. I like AMD. We'll take a look at AMD here. Okay, Tesla wedging like a monster. Like I said, Tesla, there's a lot of negativity. It's gonna, you know how Tesla moves, right? There's a lot of shorts. There's a lot of call options. It's gonna be tricky. Now, typically for Tesla, I know we're looking at AMD, but for Tesla, typically when there's a lot of negativity and low expectations, and there's any type of surprise on the earnings call, things could really swing to the upside. If they swing to the downside, you're still looking at the bottom of margins. We still want to hear, everybody says, oh, margins are falling, but the cost of the battery, the cost of producing the electric vehicle is dropping. So that's going to improve margins. At the same time, prices are falling. So demand is coming in. Demand will come in for the Tesla car. When people realize they probably need more marketing, they could buy back shares. I doubt they do that. Either way, I think there's more upside for Tesla, especially in this market right now where it's already oversold, where the biggest headwind right now is not inflation anymore. Inflation is coming down, right? That argument is pretty much done. It's about 70% over. There is no inflation argument. Core is coming down. Headlines coming down. Super core is coming down, right? The only thing keeping inflation higher right now is very lagging shelter prices. Oil, if it does spike, that is a risk, right? Natural gas just came back down. It popped, but nat gas is not going up tremendously. So it's not that. It is the recession fears, and those fears probably won't be realized till January because consumers are going to spend, right? There is seasonal employment. So if you have employment, you can keep spending. Anyways, AMD, squeeze back up. AMD, I like AMD, but you want to look a little further out. So here's AMD. I would look a little further out for AMD. I like the, obviously you can see, let me turn off these SMAs right here so we can see this clearly. For when it comes to AMD, you have a lot of support here. Very clear. There's two support levels. There's this cup and handle that it just broke out of. You could say it's here, but I'm going to go up here and say this was a nice wedge pattern, right? Look at this. Nice wedge. That's your wedge. It broke out of this wedge around, well, the open was like 102. So you have support at 102.50. This would be, the better buy. And then you have support at the top of the previous resistance, which is like 105-ish. So you have those two areas, 105 and 102.50. If you see strength coming off that level for AMD, more importantly, what does SMH look like? More importantly, how is SMH, figuring out, or how is Nvidia looking? So SMH looks like it could come back down. Maybe it does. Maybe AMD is more asymmetrical and it doesn't care about Nvidia and SMH, but Nvidia looks like it's just trending up. Okay, Nvidia looks like, could it come down in the trend? Sure, but Nvidia is trending higher. Looks pretty solid here. It is, yeah, you could call this a wedge. I just wouldn't doubt Nvidia. And here's the thing: these fund managers are going to have FOMO, so you might get a sell off, a move higher. Either way, know where your stop is. Where are you showing your screen? Over on YouTube, link in the description. It'll take you right to the YouTube. I'm live on YouTube right now. Got all the technicals, all the technicals and the visuals over on YouTube. All right. So now for the day, look, you still have communications. Break it out. Who's going to be the best beneficiary of that? Well, it's probably going to be Meta and Google. Look at Meta. Okay. Now I'm not so interested in Meta, but the Mag 7 are premium stocks. They can buy back their own shares. They have more revenue, especially going into an election cycle. There's going to be a lot of ads that are, on Instagram, on WhatsApp, on YouTube. There's going to be so much money spent for this next election. There's already been spent for what? For the propaganda, right? Whatever it is. So Meta, Google, right? Amazon to some degree are probably going to move higher. That's just on the advertising front. You go into, individual creators or the content community, that's going to go higher. So Meta looks great. Google, and I know there's smaller stocks, but with high rates, if they don't have enough cash, they're not going to be able to fund their own debt. These big cash cows can fund their own debt. Even infrastructure, and look at Google just climbing. I mean, Google is going to be, Google's solid. I don't like the setup. I think there's a better setup for Amazon and Meta and Tesla, but let's see what Amazon's looking at. It looks like it's ranging here. Let's see if it can break this next, you could say too, you could look at this. You could say that, you could say that Amazon looks like a wedge, this falling wedge here, right? So yeah, we'll see, but that's what it looks like right now. Looks pretty solid, and it's a strong wedge because it's coming from the lows. So when you get that wedge from the lows, it's pretty strong. You could even draw it here and say this has more room to fall. It's a very sharp descending flag slash wedge channel. What up, Bukowski? Why would they put their money into buying back shares rather than trying to grow their profits? Why if you're talking about Tesla, it's going to be dependent on the company. Nvidia's buying back shares because what they're doing is it pumps the EPS. Simply put, Bukowski, when you buy back shares, you remove the shares, so you have the same earnings minus shares. Your EPS goes higher, so it pumps the valuation, and it also causes FOMO, and it makes your stock a little more scarce. So that's why. Why would they not pour it into their profit? I'm not saying they take all their cash and they buy back shares. They more likely buy back shares with some of their cash and then invest the others into efficiencies, right? Also, those companies like Meta who are spending a lot of money on stupid, frivolous stuff, they now have excess cash and they can just buy back shares instead of doing that and then pour into the efficiency segments of the companies. So that would be that's what I would think they're going to do. Does Tesla buy back shares? I don't think Tesla does. I think Tesla's still in a very strong growth phase, and they're not going to buy back shares yet. It wouldn't make sense, even though some people are trying to make the argument that they do. I don't think they actually do buy back shares yet. I don't think that's the case. Okay, so yeah, so the Fed, it looks like they're on pause. Looks like the Fed's going to be on pause here. It looks like, see if we have any other breaking news here. Okay, Fed Harker says, I see ample evidence. Many do not want to sell their homes with low mortgage rates. That's the other part of the housing market. You're not going to get a housing crash simply because nobody can move. Nobody's going to move, right? Nobody's going to move. There's not enough supply. The inventory for single family homes is very low. Therefore, there's no crash, right? There's not enough inventory. That keeps prices kind of stable here. So there is not going to be a huge commercial real estate. That'll have to, reprice lower because, most people in mortgages already locked in 3% rates, but commercial real estate has to refi a little quicker, right? And the other part to earnings season, okay, other than seasonality, right? We're headed into the most bullish part of the year. This is a seasonality trend. We're heading into the most bullish part of the year. Fourth quarter is very strong. Maybe it takes a while. Maybe you move higher later, but you do have seasonal jobs. You have seasonal employment. That's going to look good in the next economic reports. So look for yields if yields start to rise. But the other thing is, well, yields might rise. Stocks are going to be okay in that high yield environment because the Fed is done hiking. because the yields are doing the work for the Fed. Yields are tightening conditions as they should versus the Fed. So that sets up not the whole stock market, but that sets up a lot of the stocks to move higher. All right, fundamentally, earnings are starting to turn positive. Okay, fundamentally, earnings are starting to turn positive, and we'll just keep up with that. Next, productivity is, and new orders are picking up. So productivity underneath the hood for manufacturing and the economy in general, that's starting to move up. You don't get a recession. I know people are saying, oh my God, all this stuff's going to break. Okay, yes, credit card delinquencies are up, but mortgage delinquencies are not even close. That's a way bigger segment. Vehicle delinquencies are rising a little bit, but S&P is not. So the economy is probably going to be, pretty stagnant, I think, in Q1, Q2. Maybe it doesn't happen till Q3, but the market anyways can digest a lot of this and continue to move higher. And back in 1995, when you did have kind of the same setup, you had the S&L crisis, big recession from 90 to 92, the market moved sideways, and then productivity started to pick up, manufacturing picked up, and the market boomed, because that means less inflation, more growth. That's exactly what that means. And I think we're going to be seeing that. Plus, China's starting to pick up. Chinese growth is picking up. China's starting to stimulate. China is, their credit impulse cycle is starting to pick up, meaning they're printing more money. They literally said, who knows when it's going to hit, that they're going to be trying to stimulate their stock market to get investors, more interested in buying stock, because their real estate market's kind of frozen. People are worried if there's another crisis, are they going to have savings to pay for health, any kind of health issues going on? So they're trying to get, and plus they're losing, their birth rates are falling. So China has to stimulate. That is the only answer here. More stimulus, more stimulus. So global liquidity, when we take a look at global liquidity here, it is still kind of poor, right? It is poor. It is pissy poor, but we're closer to the next liquidity cycle. This is liquidity, S&P 500. Look, we're getting that bounce there, SPX. Man, that looks beautiful. This is the 1 week chart. Look at this. We're gonna, if we do break out of this, this is a perfect wedge. I'm sorry, this is a perfect flag pattern right into the upside trend. I hope you guys are keeping point of this. This is a flag into the upside trend, and okay, we're gonna roll over for what? If the war escalates, sure, but that's a big, what are you gonna side with? The higher probability or the low probability, or just stay on side and wait for the big crash, or wait for more confirmation? That's totally fine. But this is liquidity. The Fed's net liquidity is still rising. It has been rising. This is Fed net liquidity, and they're still stimulating. This is global liquidity up here in orange. Global liquidity is at a standstill. It's not ripping higher, but it's not falling much anymore. And I know there's a lot of people out there for the crypto cycle saying, liquidity is so poor, but we're headed into, like, there is a rolling recession at the moment. Housing's in recession. Retailers are in recession. They're starting to default. Commercial real estate's in recession. A lot of regional banks are in recession. Tech was in a recession last year. They shed 430,000 jobs as a whole. We're going to go over that data on Wednesday, by the way, to confront PBD on his statistics. Okay. Also, you have reverse repo liquidity. I don't know why this is not showing up. Let me put that back in there. RRP, it's still moving higher. It's still moving higher, which means it is, you're basically getting, now it is inverted. So let me move it up here. This is the inverted section. And what this shows us is basically money. This is shadow QE. This is basically shadow QE. And, no, that's wrong. Let's get it up here. So shadow QE still coming into the market. What is it doing? It's buying up all the supply of US treasuries. Existing pain above. It's buying all the US treasuries. See if I can invert it. Why doesn't it let me invert this? I had it the other day. Oh, there we go. Invert scale. So that's still coming into the market. You have that liquidity, and that thing is running quickly. Okay, that thing is running quickly. This is shadow QE. Now it is due to run out. What stocks would I buy? Dimiush, great question there. What stocks would you buy? I would only buy premium stocks, Dimiush. You see the reverse repo facility. Shadow QE is still pouring into the treasury market. They're buying up the US debt. US is selling debt right now at a high rate. Why? So they can fund growth. What are they going to fund? Inflation Reduction Act, CHIPS Act, infrastructure bill. What does that consist of? Chips, semiconductors, manufacturing. So, Caterpillar. And I'm not saying go buy Caterpillar or Deere because I like tech better. They have better margins. but you're going to get them in growth, in materials and builders, industrials. But hey, forget industrials here. We're trying to get rid. We're trying to beat the Fed's balance sheet here. So really, it's technology and crypto at the end of the day. What would I buy? A Tesla. Tesla's in a huge wedge pattern. They're going to get that 7,500 tax credit, right? Meaning you go buy a Tesla. Right now, the Model 3, bro, listen to this. The Model 3 is at $28,500 when you discount the rebates and the tax incentive. So Tesla demand is going to pick up. The car is cheaper than the average vehicle at this point, and it's a better performer. It is also a better performer. Plus, Tesla has the best balance sheet. That they have the lowest debt and the most cash flow. The ratio is the best out of all the EV makers, right? So they're the only ones making money on their EVs, and so it's an easy win there for Tesla. I'm not saying the stock goes up right away. There could be a big surprise, but I like Tesla, I like AMD, I like Nvidia, I like Meta, I like Google. Apple, sure. I mean, sure. Apple, I'm not a big fan of Apple right now. Microsoft, sure, but I'm not a big fan of those. I think Google, AMD, Nvidia. I'm not even a big fan of Nvidia. I think it's up too much. I'm a bigger fan of AMD on a swing trade, maybe Nvidia on a really sharp pullback. Amazon due to go higher also. We're going to probably see Amazon go up. They've been waiting for a while. Amazon has a lot of AI stuff coming into the market. They've been taking a lot of market share in different areas. Amazon's one of those, it's one of the GOAT companies also, but I like Tesla the best. For sure. And then the blockchain, blockchain is due to move higher, an 80x return for the next 7 years when it comes to blockchain implementation into these banks. And hey, JP Morgan just came out and said, hey, we are tokenizing our assets, our equities, our gold positions, our real estate positions. We're tokenizing deposits. We're tokenizing treasuries. They're tokenizing all their assets, not just because they're putting it on a private blockchain. It's more efficient, helps them with costs. They're going to go higher. But what's the point here? In order to tokenize, the only reason to tokenize your assets or to be able to transact them across other chains to other banks, what technology enables that? CCIP, cross-chain interoperability by Chainlink. Swift is doing it. DTCC is doing it. I mean, it's the easiest win. You ask me, what should you buy? I mean, bro, Chainlink is the best opportunity that I've ever seen. Better than Ethereum, better than Bitcoin, better than Tesla at this point. Tesla's my favorite stock. But right now, I think Bitcoin, Ethereum, and then Chainlink is the biggest opportunity. Never go all in, but it's your best opportunity here. But you did ask, okay, what other stocks are there? That's pretty much it. I don't look at a vast amount of stocks. Palantir probably did good too. I'm not looking at a vast number of stocks because there's too much. It's kind of like when you go to eat and there's a buffet, you don't know what to choose. There's too many stocks here. So I'm going to just go with the premium stocks. If you want to scan for yourself, this is kind of the scan. If you want to think about the scan, how do you scan for premium stocks? Where is it at? You want to look for stocks that have a lot of cash flow. This is the boring stuff nobody wants to listen to because they're like, just tell me what it is. Because a lot of people just want to be told what to do. I'm not going to do that. I'm going to tell you what I think, but I'm not going to tell you what to do. So if you're looking at a stock in a certain industry, ask this question. How is the revenue growth versus the other companies? How's the revenue growth? Number two, how is their pricing power? Are they able to change prices? I don't even think that's that important right now, but are they able to change prices up or down and still collect more revenue? Basically, is there strong demand for the product and their brand, right? Are they increasing efficiencies? What do those margins look like? On the earnings call, you're going to see those margins. You want to know why the margins are moving the way they are moving, okay? Low debt and high cash flow. Why? Because they can use money market funds to fund their own debt. That's a big one there, meaning the high rate environment is actually fueling the Magnificent Seven. The high rate environment is actually benefiting the premium stocks. Okay, that's why I'm like, dang, this is a bullish setup because, more and more companies that suck, that cannot do financial engineering, they're going to go lower, and the ones who can are going to go higher. Share buybacks, can they increase their earnings per share and increase scarcity of the actual asset / share ownership? If they do that, the stocks are going to go higher. Debt funding, we already talked about that. Is it a disruptive? This is where I'm more privy to. Is it a disruptive innovation or technology? Does it have secular adoption? So is it disrupting in some type of way? AI is a disruptor, right? Is it innovating also? And is there secular adoption? Are people buying into this? Are more and more people actually using these, right? Tesla cars, EVs in general, who's the best bet there? And does it benefit? This is a key for the market rally here, Santa Claus rally. Does it benefit from fiscal policy. Okay, yes, the government is unloading debt so that they can purchase more, or not purchase, so that they can fund government programs and government stimulus for infrastructure, for chips, right? For semiconductors, for renewable energy, XYZ. Who benefits from that? I'm not going to tell you what to buy, but I'm going to tell you how to scan through it. FNGU so high, not sure I can buy these even as hedges. Cash flow yields. I mean, your best hedge, bro, honestly, like, it depends on your time frame. Honestly, when it comes to hedging, it depends on your time frame. Your strategy is going to look better than others, but if you look really far out, the best hedge has been Bitcoin and crypto. That's been the best hedge. Oh, crypto is not a hedge against inflation. Well, go check the price of Bitcoin, right? When inflation first started to print versus every other asset. It's outrun NASDAQ. It's outrun pretty much everyone, right? Crypto in general has, and now you're at a very low point. That is your actual risk. The downside risk is Bitcoin goes to 20K. Okay. That's your downside risk. Also, what happened during the banking crisis? When something broke, Bitcoin exploded, right? During the banking crisis. What also happens is when there's a crisis, some type of liquidity crisis, the Fed's going to pump more liquidity. Who's the fastest horse when liquidity goes higher? It's going to be crypto, right? It's going to be crypto and tech stocks in general. So that's the hedge. The thing is, people think, what is the hedge? Gold? Hell no. Gold ain't going nowhere. Gold's at the same point it was. Listen, Patrick Bet-David, now I respect the dude. I like Patrick. I like PBD, right? But he's obviously running an ad for gold on his channel. Go get your money. And nothing against people getting money at all, but gold sucks. Okay, gold does suck. I'm sorry, trade gold, but to own gold, what? These are baby boomers. That you ask any millennial, that's where all the money's going to. Do they buy gold? Hell no, they don't want a piece of gold. Gold is also a manipulated market. I'm going to talk about this on Wednesday. I'm just going to go through a little bit of this. Gold hit its peak in 2011. Hasn't been there since. It hasn't been there since. It's still down from 2011. Gold is still down, bro. If you bought Bitcoin in 2011, you're up 1,000,000%. Right? Bitcoin is like $5. So gold sucks. I'm sorry. It is not a hedge. Trade it if you're a Forex trader, but gold is not your friend, bro. Gold is down versus the Fed's balance sheet. Okay. It's trash. It's trash. Quite frankly. I don't even talk like that. Quite frankly, it is trash. All right. So, let's see. What else do we got here? How come retail sector ripped so high today? Simple, very simple, Bukowski. I didn't even see that, but let me see the retail sector really quick. Let's jump over to the retail sector. Why did the retail sector jump so quickly? XRT. Okay. Well, here's why. And I think this is just seasonal. Think about it. Where do people spend, right? For Thanksgiving, Halloween. Well, so we got Thanksgiving, we got Halloween, you have Christmas, cyber this, cyber that. Everybody's going to go, the retailers are going to benefit. They're going to have one more push, in my view. The best will survive, but they're going to have one more push in the retail sector because of seasonal. There you go. Exactly. Christmas spending. That's why. Because U.S. consumers love to spend what they don't have. And guess what? At the end of the day, our politicians in-house now are probably going to forgive some of that debt. That is my guess. I'm not saying bet on this, but in 2024, bro, election cycle, these dudes are going to come in and give some type of stimulus to people that need it. Oh, student loan debt repayment. You don't even have to pay your student loan debts until next year. There's not an immediate pay on student loan debt until October of 2024. That argument's out the water, right? True seasonal. Yeah, seasonal. It's seasonality. That's what I'm saying. I think this is a seasonal setup for a year-end rally. And I know the market could rip lower at the end of the year because the recession really starts to come, the rate hikes start to hit. There's some evidence that suggests that rate hikes will start hitting harder, in 2024 in like March, April. I think it's like March, April, May. Fine. The market rips lower and then the Fed steps in because things start to break. The Fed steps in. That's great. That's been the playbook, right? Banking crisis, the Fed steps in. That's the playbook. Also, okay, if you're talking about S&P 500, maybe you wait. But if you're talking about Tesla, Apple, Amazon, Google, Facebook, AMD, they're not going to rip back to where they are today. They're going to be up a lot more, and then they're going to rip lower, but they're going to be much higher than they were, right? So this is the bear trap. This is the bear trap that everything's going to fall. We're going into recession. The consumer is slowing down. Not really. Debt is too high. Who cares? It's Christmas season. Maybe next year. The Fed's going to keep hiking. Maybe they do, but right now it looks like the Fed is not going to hike. It looks like the Fed is done hiking. That's going to be very bullish for the market. The market doesn't even believe that. Fiscal policy coming in the fourth quarter. There's a lot of technologies coming on hand. We can go all day about this. What would you say? 1,000x, 1 times 10 million percent. It's inception. Oh yeah, it's like 10 exactly. You're gonna buy gold versus Bitcoin. Good luck. The first bit, and here's the thing about these gold guys. If the world ends, bro, you have bigger problems if the world ends. You're gonna buy gold. Good luck. Good luck if the world ends. Who are you gonna transact with? Who are you gonna transact with? A millennial? First of all, people are gonna want food more than they want a bar of gold. It's just silly. It's the dumbest thing. What if there's a cyber attack? There's cyber attacks every single day. You just don't know about them. And even if there is a big cyber attack, it might last a couple hours, maybe a day, and then that's it. You're gonna buy gold for a day and then what? Sell it back to the market? Okay, good luck. And if there's a big cyber attack or a nuclear war, well, like I said, you have bigger problems than that. Plus, you can't touch the Bitcoin blockchain, right? It can't be debased. Anyways, I'm not arguing Bitcoin versus Bitcoin versus gold in that respect. I'm just saying that's a very low level way of thinking. You're probably better off owning, real estate or, weapons than gold if you really have the world fall apart. So that's kind of silly in my view. It's probably weapons. It's true. I was at work and the whole parking lot, even outside the store parking lot, was packed. People are spending, bro. Seasonal spending, Santa Claus rally. If the world ends, I'm gonna trade water and potato. Exactly. Water and potatoes. That's your world-ending hedge right there. It's not gold. Nobody's gonna walk around. You can't give gold to China. What are you gonna do? Take a boat? You can't trade with gold. We're not in 13 BC. It's just not gonna happen. I'm not saying gold doesn't have a place in a portfolio, but nah, it's not gonna make you money. Gold's not gonna make you money. It'll preserve your wealth, but it's not gonna make you money. And it's not, and your buying power is definitely not going to be preserved. That's for sure. So that's what we're staring at. We're staying at that case right now. Macro forces are important, right? You want to keep an eye on yields at the moment. What else do we got up here? Tesla looks pretty solid. So this is the look at this wedge. Look at this beautiful wedge. The expectations are very negative. Maybe I'm wrong. I give it a 70% chance Tesla breaks out to the upside. And if it does break down, it retests about 210 at the lowest, 210 at the lowest, and capitulates right back up and breaks out because it's looking forward to 2024, right? We're not going to deliver. Tesla's not going to deliver a lot of revenue, but the market wants to see. Wall Street looks ahead and wants to see, well, what about end year? Are you going to meet your target? Number two, the tax credit's going to stimulate more demand. Number three, fourth quarter is always the strongest. If you look back on Tesla. Number four, Cybertruck's coming online. What is that going to bring to the table? Number five, what is number five? Dojo, right? Supercomputer. You also, there's just too many. So even if it breaks down, I think it goes higher. I think that's the case I'm looking at. Anyways, throw me again. Let me know you guys' question. Hold on, I'll be right back. Oh, what the heck? And also, yeah. And how about that? That fake news for Bitcoin? That was crazy. All right. So looking forward tomorrow. Tomorrow, your the most important news for tomorrow, when it comes to the economic data, is going to be retail sales. Right. That's what we're looking at right now. Retail sales, coming in year over year, month over month. How does the consumer look? This is a consumer measurement. So how is a consumer? If we go on a year over year basis, consumer has it bottomed in April. The consumer is still purchasing. We're not at super high levels, but historically we're at historically low levels. But I mean, that's going to probably pick up, right? This probably falls off into, I'm thinking March, February, March. I think that's when it really falls off. It's always backwards looking. So that's my guess. On a month over month basis, we'll see this too. July, August. So we're looking backwards here. You're always looking backwards. Either way, it probably falls off next year. Industrial production, this is going to be important. It's starting to bottom out here. The higher production goes, this is the economic boom that I've been talking about under the hood, the manufacturing boom. And services might slow a little bit into Q2, but I think ISM gets above 50 and we start expanding again, rolling expansion. Let's see, industrial production month over month has been pretty solid. You get the marking NHAB. Now, this is going to be bad, right? The home builders are definitely not building. That's an issue, but it's a frozen housing market. That's it. There's still multifamily being built, so there's going to be more construction jobs and a lot more GDP from construction spending. Oh, I'm tripping. So that's what we're looking at tomorrow. And then obviously Wednesday is going to be Tesla. Like I said, building permits, early housing starts, more economic activity. And then we got earnings afterwards. We also have the Fed beige book. That's going to be key to see what the Fed is saying. I think that's going to get the market going. So I'm still bullish. I still think we're heading into a Santa Claus rally. That's what it looks like until I see the evidence change. Why would Warren Buffett put money into home builders now, though? Probably because if he is, probably because, let's take a look at that chart. He's probably doing it because he sees the boom in multifamily coming. And really, if the Fed lowers rates, is going to be huge. And usually Warren Buffett's looking way ahead. He's a smart investor, even though he doesn't get into tech, but he's obviously peeping out some type of fundamental transition, into building, right? Government, my guess is the government is going to print more money. You should just call it print money. They're going to start some type of program in 2024. There's going to be, listen, we're headed into a political cycle, bro. They're headed into a political cycle. What does that mean? The government is going to try to get votes by pandering to the voters who are on the side, right? What's the best way to pander? Some type of living situation, well, not living situation, but some type of stimulus or program, social program for homes. So maybe Warren Buffett knows that, and he knows there's going to be a big boom in builders. Look at the actual construction ETF is really down, but once you see that bottom, let me see, where's the support at? 75 is about support. So you can watch this. I mean, it did break down, but either way, you're looking at 75%, 75 support. Let's get that drawn here. But yeah, that's probably why, bro. It's multifamily builds are nearly at all-time highs, and I don't really know how you make money off that, to be honest. I don't want to be in multifamily. I don't want to be in real estate. There's probably ways to make money. It's not my expertise. What do I think of Apple for tomorrow? Sammy, what up, Sammy? AAPL. Let's take a look at Apple here. By the way, if you want to see the technicals, go ahead and jump on YouTube, link in the description, or on my bio. If you're on TikTok, link in the bio, and then you'll be able to see that. Let's go right here. See what looks better. We'll keep it like this. You guys can still see that, right? All right, cool. So how is Apple looking? Well, it's in a falling wedge pattern slash flag, whatever. Very bullish. When you look at the 200, my guess is Apple's going to pull into this 200 daily moving average. It's probably going to pull back. And really what you're going to get formed here is a reverse head and shoulders. Very powerful, right? Very powerful setup here. So you might get that reverse head and shoulders. You buy. I don't want to tell you when to buy, but I know what I would do. Either way, that 200 is pointing straight up, right? So the fact that the 200 moving average is very vertical, or the slope is very vertical, tells you there's a lot of momentum here. Tells you there's still a lot of momentum here. So I think it pulls in here at I don't know what I'm going to look at the 200, but it probably pulls in, and then the breakout is probably going to be somewhere around, it looks like this thing's moving like this. I think the breakout is above 175 to 180. That's probably your breakout, but there's somewhere in there it's going to look pretty good. That's Apple for you. So you said, please give me your full input and thesis. But if you're talking about just for tomorrow, I don't do that. I don't do I don't do like next day. Here, I'll do the 30-minute chart. We can look at what it looks like. But I don't do like date. There's too many factors in the short term that could be false. There's just too many factors. Unless it's like, yeah, there's too many factors, man. It's easier to do S&P or NASDAQ, but there's too many factors for individual stocks to really make a guess. I would say this: if Apple does get above 179, holds, and then gets above, dang, it's already close to 180. Yeah, if it gets above, listen, if Apple gets above I'm gonna call it 175. I'm not 175, 180. If it gets above 180 and holds, it probably goes higher to 182, something like that. It looks good. It's pulling into the trend. Apple looks solid here, but I don't have predictions because the pre-market matters, right? The war is also going to matter. What up, Hassan? AMD. All right, let's check out AMD here. So yeah, that's my Apple input. I mean, it's still a strong company. They probably buy back shares. I swung them for tomorrow. Okay, it looks solid. I mean, it pulled back into support at 176. That was your clear support. Let's remove that was your pre-market. Yeah, 176.75 was pre-market for Apple, and it looked pretty solid. Let's go to AMD. AMD is setting up. Look at this big, like this is the setup here for AMD. You want to see this cross. This is a cup and handle-ish. So I would say AMD, you want to see it hold VWAP. Let's take these SMAs off. This is not what you want to see here. Holding that EMA, where's VWAP? Did it closed below VWAP. So I would say your best bet is a pull into 105 or 102.50 for AMD. 105 or 102.50. Watch, let's draw this back. We just talked about it. 105 or 102.50. 105 is the previous resistance level for AMD. It broke out of this wedge, and I would say the top of that wedge was about 105, but where the wedge breakout occurred was about 102.50. So those are the two areas that I'd be staring at for AMD. And then how do you enter that trade? Well, you got to see a pattern setup. You want to see volume come into the market. You want to see the overall market also in an upside trend, not just get in because, or you could get in because it really depends, but the probability is in your favor when the overall market is also moving. You think you should sell your puts because of the China thing? I swung them because of the China thing. Sell your puts. Oh, because you bought puts on Apple? You bought puts on Apple. I would have to be live to tell you that because, again, things could change pretty quickly. But as a narrative, it does look like Apple filled the gap, got rejected. You're buying puts on Apple. I mean, if Apple gets above 180, if it holds 180, let me see what it looks like intraday. If Apple holds 180, I'd be out of the puts. Yeah, if it gets above 179.50 or 180, I'd even say 170. Yeah, I'd say 180. If it gets above 180, you're out of the puts. On the downside, you're looking for what, 175. I don't know, dude. We'll see how Apple turns out. It looks pretty strong right now. Unless you get like this big doji candle, some type of reversal candle. Let's see what it looks like right now. Yeah, it looks pretty strong. I would say this: if the dollar spikes tomorrow, if we get the dollar making new highs, oh, you're doing those weekly options. Those are dangerous, bro. Those are really dangerous. Yeah, you can see my screen if you go to YouTube. It's on the YouTube link in the description if you want to see the YouTube or you want to see the actual screen. But go ahead and feed me your questions. Did I go all the way through AMD? We marked it up earlier. But yeah, AMD, I would say 105 to 102.50 is a really good level. If it cannot hold 102.50, it probably breaks down again. So I want to see 102.50, right? That's what I want to see for AMD. 102.50. AMD is a wild card intraday. Live on YouTube, yes. Yes, live on YouTube. Hopefully the bond market starts to pick up also. Let's see, 10-year yields. Those might be peaking out, man. If these really have peaked out, the markets should be ripping up because we are still pretty oversold. Let's see what SPX looks like overall. Yeah, you got the RSI starting to pick up, year-end rally. RSI is picking up. Liquidity is okay. I think this takes us higher, man. It's just a lot of the Fed rate hikes, they don't affect S&P companies. They don't affect these companies because, I mean, it just doesn't impact them. They're not locked in at that rate. NASDAQ might break out before. NASDAQ is now supporting the 100 and the 50-day moving average also. Let's see. So earnings again, taking a look at earnings going forward. We got Tesla, Netflix. I'd say these are the biggest one. Tesla, Netflix on Wednesday, Lam Research, US Bancorp, Morgan Stanley, whatever. And then nothing really at the end of the week. And nobody cares about AT&T. Coca-Cola next week. Meta, you got Meta next Wednesday. So it looks like these Wednesdays are going to be pretty explosive for the next 2 weeks. Wednesday. I want to see what UPS says on Thursday because of the seasonality. UPS is always a bellwether to what the hell's going on for the consumer. Is that it for next week? I don't see nothing too big. It looks like Wednesday. And then the following week is when you get Apple on the Thursday. That's going to be typically, you know, where the market's headed after Apple reports earnings, and then you end the week. And then that Monday is kind of like the market's like, all right, we digested the big mega cap technology companies. We digested the earnings. We looked it over the weekend. Let's figure out where we're headed. So I think, what is this going to be? November 6th. This month's going to go by quick with all these earnings. And so far they're beating expectations. They're beating expectations. The expectation is literally positive, man. So I'm not trying to convince anybody of anything. I'm just giving you the data that I see. You know, I'm not trying to stay super neutral because that's stupid. You got to make a choice somewhere. I'll give you neutral. I'll tell you, hey, there's a 30% chance the market doesn't go anywhere and rolls over. But there's no 50-50 here. There's no 50-50. It is what it is. 50-50 doesn't exist. Not even when you cut a pizza, because somebody's going to cut it off by a centimeter. Right? Yeah, so that's what we got here. I don't think you guys have any other questions. Again, Wednesday, I will be doing the breakdown against the bear market on Wednesday. Everybody's negative on Wednesday. And if you want to follow, a chain link person, fishy catfish. I know it's really difficult, but this is the argument for chain link. Swift has already been announcing the biggest messaging system that they are using CCIP to digitize their real world assets. It's going to take time. Everybody's bearish on the market. There we go. Man, those comments come in slow. Keep throwing the comments out there. I don't see it takes a while for them to come in. Apple earnings are going to be the catalyst for the market, move 10% in each direction. Yeah, I could agree with that to some degree. But how is the consumer holding up, and how much would weakening consumption affect the Mag 7? I can tell you that very few have locked mortgages over here in Europe. Oh, okay. Yeah, Europe's probably a different picture. Europe is a different picture, but the Mag 7 don't care about consumers, right? Apple and Tesla to some degree, yes. And Amazon to some degree, yes, but also Amazon has AWS. They make most of their money business to business. And Apple, I mean, I really doubt Apple could move sideways, which makes sense. I don't think it makes that big of a move, but I don't think the consumer story comes into play until next year. And there's going to be a race to get in Apple and own it. There's going to be a race to own these companies as they buy back shares, as they beat EPS, as AI increases their efficiencies, which means more earnings per share. I think that's just what we're staring down the pipeline. And companies who are fully dependent on consumer spending and consumer strength, they might get one more pop here and then roll over. So it's not an overall market rally. It's a Mag 7. It's the same story, and maybe we do head into recession next year, like a real recession. You need unemployment to spike. It's not happening because there's seasonal jobs. So maybe it spikes next year. Either way, if it does start to spike, I would not discount, like I said, the White House steps in and they start giving more stimulus, right? So I think that's the setup. I think that's what we're staring at here. Yeah, if you guys have any more questions, I'll stay on a couple more minutes. Or if you want me to answer anything that you saw in the news, right? We could talk a little bit about the war. What is the war looking like right now? I would say that, let's see, I always go to this breaking news. I know there's so many things you could look at. I'm looking into this other news station, but I don't know if it's going to be legit. Right now, it does look like the war expectations are going to be easing. It looks like they should be easing going forward, because I mean, Israel should be in Gaza right now. Israel should be in Gaza right now. The Iran is saying they don't support the Hamas. If they did, well, that's going to increase tension. Saudi Arabia doesn't want no part of this war, and they're like the leader of the Arab countries. Saudi Arabia is like the leader. So you need Saudi Arabia to really flip for anything to really turn negative. Russia says they want peace, and hey, that could change quickly. But I think that's the setup. I think this is going to wash over, and I think the market's going to rip. I think the market's going to rip. Not all of it, but I think a lot of the market's going to just rip higher. They're looking for a deal or something. And that's just the probability of things. I'm not saying that's going to happen, but on a day-to-day basis, the probabilities either stack in your favor or they don't. And that's what I'm looking at here. Do I like CCL, Disney, or Tesla? CCL. Here, I'll look at Disney. I like Tesla for sure. CCL, hell no. Nobody's going to go to Carnival Cruise, especially this late in the year. Carnival Cruise is trash. The price action tells you is trash. Oh my gosh, this thing is trash. Do not buy dumpster fires. Just because they look like they're low doesn't mean they're going to come back. It obviously peaked what? Dang, this thing peaked in 2017. Any stock that didn't peak during the cycle is trash. If you did not hit your all-time highs during the trillions of dollars that came into the market, there's something wrong with you. So, nah, Carnival Cruise is trash unless you have like 10 million. Nah, I wouldn't buy Carnival Cruise. Disney, yes, Disney's better than Carnival Cruise for sure. Disney is probably due for a rip higher. I think it'll resolve itself. Disney and Target, but is it the best horse going into the environment? Right? You want to think about where is the economy headed? You want to think about where is policy headed? That's how you frame the market. Where is policy? Where's your framework at? Where is policy at? Who does it support? Does Disney get supported by Fiscal? No, it doesn't. Right? And they have to pay high rates for these stupid commercial real estate properties, whatever. So Disney, I don't really like Disney. What about also, how's the economy squaring right now? Is it reaccelerating? Is it running out? Is it idle? Well, the economy is starting to reaccelerate in the manufacturing sector. Does that benefit Disney? Not really. You need consumer spending, and consumers are not going to spend Christmas going to Disneyland. They're probably more likely, I mean, maybe they do a little bit, but they're raising prices. I don't think their pricing power is going to last very much, and they have a bad rap. So I don't like Disney. There's other, I mean, crypto, I mean, goodness sake, dude, nothing is outrunning crypto from the bottom. That Bitcoin ETF comes in, it's going to rip your face off. It is going to rip your face off. And everybody knows it. Everybody knows it. That's why you got that big O, rip higher earlier. I mean, where's Bitcoin at? What's it at? It's at 28K. Yeah, it's starting to come up a little bit. Ethereum starting to peak a little bit. ETH to BTC is falling apart, unfortunately, which is Bitcoin is not, I mean, Ethereum is not gaining dominance. Hey, this should be in the log. Is not gaining dominance against Bitcoin, but it is at the bottom. We'll see how it plays out. Either way, crypto in general, if you're talking about an investment, Disney is trash. And my friend has Disney, and I'll tell it to his face. He knows it. He just thinks people think safety is Disney. The safety is the stuff you're in. Well, guess what? Your freaking purchasing power is much lower. Disney is not doing nothing for you. Your purchasing power sucks. Inflation is up on a compounding 20% compounded. Disney stock, where is it at? No, it's nowhere to be seen. It's not. It's down. So Disney sucks. Point blank. Apple, Amazon, Google, Facebook, Tesla, Netflix, Nvidia. I mean, there's other stocks out there. Don't get me wrong. I like Palantir. There's other stocks out there that I probably don't even know about. I like Zoom over but those are the solid ones, especially in this environment with this fiscal backdrop, with this policy backdrop. You got to think of it like this. What is the environment? What is the path going forward? Fiscal, monetarily, right? Number two, what vehicle? Well, not even what vehicle. Where's the economy at? Is it accelerating? Is it decelerating? And then number three, what vehicle do you use to take advantage of the environment? Right? Do you get in a submarine when there's no water? No, you don't. You don't buy bonds right now. Okay? Do you when the road is swerving, do you take a crotch rocket? No, because you're gonna wreck. You can't go that fast, right? Crypto's not there. I mean, I think it is there, but I'm saying like in general, you got to think about these things. What about a helicopter? Stocks are more like a helicopter. They can navigate in general any terrain because a helicopter can go pretty quick forward, fast, up, hover around because the stock market does have real estate in it, does have gold, it does have materials, it does have technology, it does have consumer retail. So the stock market in general, but is it the best horse? Once the Fed starts printing, it's not. Right? You want that crotch rocket super jet when the path is just straight. And I think that's crypto right now. I think the path is opening up where everything's just straightening up. And I think that path is crypto. And that's going to outperform. And you know my position. I've showed it to you guys. I'm long Chainlink, extremely long Chainlink. I'm long Tesla, which could go wrong, but I'm not that big in Tesla. I'm bigger in Chainlink because the central banks are using it. The CBD, this is the story for the CBDCs. Oh, you said the war has not started yet. Israel's just giving time to people in Gaza to move south towards the Egyptian borders. You might be right, but during the Afghan war, the market went higher. So it has to be the war itself. I don't think is that big of an issue. It has to be like something that messes when it comes to the markets anyway. Right? The Ukraine war is an issue because oil spiked. So if we do get oil spiked, we're in trouble. But if Saudi Arabia is controlling oil, and now we have Venezuela, right now we're easing sanctions in Venezuela. The US right now is trying to find ways to position themselves to where oil doesn't spike. That's what they're doing. They're going to give concessions for that, right? Even probably to Russia. Maybe we'll ease a sanction, Russia, if you guys do this, if you guys say this, if you help. Who knows how it plays out? We don't know. But just because you don't hear anything doesn't mean nothing's happening in the backdrop. And Janet Yellen said, we can support both wars, probably because they're going to keep printing money. But yeah, well, that's all I have for you guys. I'll be on again tomorrow and working on a couple things. We just keep your eye out. I will have a pretty soon here. We're working on some damn, what do they call it, Isaiah? So focused on the market right now. We're working on some education, some market education, some macro technical, technicals, right? So you want the technicals tells you when and how much. The macro tells you how is this working? The fundamentals tell you what it is, what exactly is happening. When it comes to crypto, the fundamentals are supply and demand and the use case. Stocks, obviously, you have the earnings reports to go through, and the macro right now is the most important factor because once the macro changes, the fastest horses are going to be unleashed. Okay, that's what's going to happen. So I'm going to have that curriculum out. I don't know when. I'm not going to give a timeline yet, but we are working on it to equip you as an investor, as a trader. Maybe you're an investor and you just are like, what the hell is going on? Or I want to learn how this stuff works. If you're a trader, it'll give you an edge on how to see how the market moves. And hopefully it works for you guys. So we're working on that, and we'll I'll let you know when that comes out. Hassan, what do you have here? Israel's just giving. Oh, yeah, you already said that. My bad. All right, well, that's it. That's all I have for you guys. Again, you guys stay blessed. Make sure you get your workout, eat healthy, take care of yourself, stay blessed, have some gratitude, and I appreciate you guys for coming on. We'll be back tomorrow. And Wednesday, the episode is going to be proving Patrick Bet David wrong. I'm going to debunk Patrick Bet David. I love that guy. And I'm not even debunking him. I'm just going to challenge his views to you guys, because this is he's a mainstream guy. And, I think he's wrong. So that'll be Wednesday. Stay tuned. Catch you.